Hey everybody, so I am here to help. I want to tell you, if you're looking to buy a home right now, interest rates are high, but that's not really the issue, right? I want you to know that you really want to go the conventional route. Now, of course, there are loans out there. There are FHA loans that are backed by the government. There are no money down loans where you don't put any money down. But I'm going to talk about the conventional route, and that's typically a 80-20. That means that 80% of the loan is financed with a first mortgage, and then 20% will be down payment from the buyer. Now, that's not going to involve any type of seller concession. That's going to be a separate thing. You always want to try to get a seller concession, and usually a seller will give between 3 to 6%, and that will go towards things like your closing costs and your prepaids. Closing costs is going to cover when your loan is closed at more than likely a title company. You're going to have costs for that. And also, you have to come up with about 14 months of prepaids. Prepaids is your taxes and your insurance. So, for example, if taxes are $100 a month, or if insurance is $100 a month, you have to have prepaid at the closing table 14 months. So that's $1,400, for example, for closing for the taxes, and $1,400 closing for the insurance. And that's where you can have a seller concession come in and help you with that, plus some of the closing costs. Okay, but what I want to talk to you and focus on is, if you're getting, for example, a home that costs $100,000, you would have a 80% first mortgage, which would be $80,000, and then the buyer would be required to come up with the 20%, and that would be from a down payment from your funds. Typically, that's going to be money you have deposited in your account. Now, there are rules. Sometimes people receive gifts from family members, etc., but you would be coming up with the $20,000. Now, some of the things that you have to do to prepare yourself, you have to understand that they're going to look at your credit history, your credit score. They're going to require you to provide things such as your bank statements, your pay stubs, your taxes, etc. And you're going to have to get an appraisal for the property. The property has to be, for example, we go back to the $100,000 amount. The property has to be valued at least what it's being sold for. And if you're going conventional, you can't have any issues. Okay, so the property would have to be also valued at $100,000 if it's being sold for $100,000, and that's just an example. So I hope some of these tips are helpful to you. If you're trying to buy a property, there are some other options. They have some consumer loans where you can do an 80% first mortgage and a 20% second mortgage, where you're not coming financially with that $20,000. You would get a second loan. So you'd have a first mortgage at 80% and a second mortgage at 20%, for example. Or you could do a 80-15-5. That's another example, where the first mortgage is 80%, the second mortgage is 15%, which will be $15,000. Then your contribution would be 5%, which will be $5,000. Now, the reason I'm only giving you the example of an 80% loan is because if you go higher than 80% on the loan to value, you're going to have to pay what's called PMI, private mortgage insurance. And you don't want to do that. That money doesn't go anywhere. So, try to have the 80%. If you have to do an 80-20 or 80-15 or an 80-10-10, try to have 80% on that first mortgage, so you do not have to get private mortgage insurance. So I hope this helps. If you have any questions, I try to help you if I can and answer them. Okay, so thanks for checking out this video. Bye.